All right, we might kick off. I'm getting a million messages of people saying they're running late to tune in, but they're going to miss the beginning. And you guys who are already on time will get all the secret information up front. So welcome to our second webinar for 2021. We're looking at, third webinar, sorry, I stand corrected. We're looking at ad investment today, some brand new data that we put out a couple of weeks ago in our quarterly PwC online advertising expenditure report, as well as some new information on the January market. And we're also joined by some amazing agency leaders who are going to share with us their thoughts on a little bit of a reflection of last year, but more importantly, what's happening this year. So I'm going to be joined, I am joined, you can hopefully see on your screen, by Sarah Keith from Paykel Media, Liesa Newland from Group M, and Nick Durrant from MAGNA. So they'll be joining me after I share some information with you. For all of those who haven't been on Twitter or LinkedIn or any of the trade press this morning, Google made an announcement overnight clarifying some of the tracking details that will operate in a post third-party cookie world. Tiff, who's running the webinar, will share a link to an update that we've put up on our site today. I'm sure there'll be more questions on that, but have a read and get in touch with myself or our wonderful tech lead JJ, who can give a bit more detail on that. And I'm sure at the Programmatic Summit next week that will be discussed quite broadly as well. All right, so I'm going to get into the details of the reports. Feel free to throw questions in the Q&A box or say hi in the chat area to the people speaking. Please feel free to get involved. And hopefully we'll let you go a little bit early today. We'll try and get through by in about 45 minutes. So depending how many questions you guys have got for us. So let's get into it. So hopefully most of you are across the quarterly report that we put out in market and we have done for 12, 13 years, I think it is now, in collaboration with PwC. I'll just give a little bit of information on how we compile this information, because it is a little bit different than, say, SMI that's in market. So it is gathered from the sell side, so publishers provide data on their complete revenue, their complete ad revenue. So it does include agency and direct. And we also model for some of the larger global players who are unable to share some of the local market information. So they're the sort of two sources that we use for this. So we can go a little bit deeper into the local players who provide quite detailed information, but we've got great macro level information for the total market. I'm going to cover briefly calendar year 20, a bit more detail on the last quarter of the year, and then a little bit of a sneak preview at January. Headline number, I guess, total digital market for calendar year 2020 was 9.5 billion, up 2% year on year, which is quite shy for the digital market, but pretty good for 2020. So you can see those sort of the two pillars there. We had display holding quite well. I'll talk about display a little bit more in detail, but that does include pretty much everything that isn't classifieds and search in there. So you will have video, you'll have audio, you'll have all the different formats in feed, social, etc. So it's quite a broad bucket, and we'll break that out a bit further. Classifieds is the listings revenue, so rather than display revenue. So that took a pretty heavy hit in 2020 as well as 2019. So a lot slower growth, and that's a lot more connected with consumer confidence, but also, I guess, a little bit of a change in the market in those marketplaces. And search, which is pretty straightforward. This gives you, I guess, a bit of a feel of how the market has gone over the last few years. And you can see the quite healthy CAGR, so the sort of annualized growth for that period over all three categories has been strong. Classifieds, as you can see in that yellow line, softer both in 2019 and 2020 to sort of bring that overall growth number down. But look, a pretty overall healthy growth curve for the total ad market there. If we drill into display, and this is, I'm going to look at the quarterly numbers in a minute, so it's a little bit different for the last quarter, but for the whole year, And you're probably all sick of us saying this story, unless you're actually running a video market. That video has been the superstar yet again, so up 17% year on year, now representing 53% of that total general display bucket. Which is good and bad in my opinion. It's great that it's growing. We need to make sure as an industry we keep evolving and having different exciting formats coming up underneath. So we've got a really lovely diverse offering for consumers and marketers. So watching how those other categories go. So both in feed and display down a bit, obviously not as depressed as some of the sort of other channels, but still sort of down year on year. And a bit of other activity. Some of that's a bit of podcasting, some of that's other bits and pieces. And as they're big enough, we'll break them out into their own categories. Categories, advertiser categories. Biggest change I have seen forever in the digital investment side of things over the last year. Some of this has been coming for a little while, and some was absolutely brought on by our events last year. The auto category, which used to sort of represent around 25, 26% of the display market, has been pulling back. So you can see that quite significant share shift from 19 to 20, you know, from 20 plus to sort of 12% of the market. So really different shape. Again, I like diversity, so I don't mind that not being quite so dominant, but obviously that has been a financial hit and not just a share hit in the mix there. Retail superstar of the year, up quite significantly. Real range of players in there. You know, some of the obvious, but you're also getting some of the smaller players in there as well. So taken the #1 category for the first time ever. Healthy growth in finance, and that sort of had sort of different peaks through the year and different products, but overall came up through. FMCG, we know what a superstar it was last year. Different manufacturers took very different approaches to their investment strategies here, but overall that came out on top. And the technology space, which spent a lot right across the year, particularly initially in lockdown, but then right back in the December quarter as well. So sort of a real change in that market pie there. Let's go a little bit deeper into the last quarter. This slide really just gives you a real feel for the curve of how the digital market came back. We're all, I guess, eagerly anticipating to see where that March quarter point will come. It will not be as high as December. December is always our big quarter, but it, you know, hopefully will be above where we were in some of the sort of March 2020 particularly. So hopefully we can keep some of that growth going. And again, this slide just shows that classifieds market, that listings market, not coming back as strongly as the other sort of drivers. And some of that is linked to consumer confidence. The other areas, we always see investment in the display, in, I guess, the generating excitement type area in the advertising market to try and trigger that consumer confidence and that consumer growth. So hopefully we'll see a bit more growth in the Classies listing area next quarter. Breaking out versus the Q4 previous year and also the September quarter, incredible growth, incredible comeback for that quarter. So up 20.3% on Q4 2019. You can see the breakout there. Again, display really starting to take share with that innovation in product and that general appetite for video. So really different look. And this slide shows how that share is changing. So we see classifieds sort of at one of the lowest levels of share of the total ad market that it has been. That will come back up a bit, but definitely display has taken a little bit share from classifieds as well as a little bit from search, but that sort of bounces around a fair bit. But search still, as much as we focus on display and the different bits and pieces, search still being the biggest investment category there. As opposed to the calendar year view, this slide pleases me greatly. So not only do we have growth in video, but we have growth across the board. In my conversations with both agencies and publishers in November and December, the general excitement and exhaustion of money flowing back into the market and people looking to invest in different places when certain buckets were full has meant we've had a little bit more of a distributed investment strategy over that last quarter. So we've seen growth in all those categories. It'll be really interesting to see how that, I guess, diversification and some experimentation. I don't think there was a lot of particularly wild experimentation last year, but definitely people trying different types of inventory if others were sold out. What the success of that was, and if that investment continues to flow through for the following year, and we'll get our agency leaders to give their opinion on that. Hopefully more than their opinion, their plans. We have collected for the last couple of years information from the larger content publishers who do give us their deeper information, how their inventory is being bought. No surprises to see that programmatic is sort of taking share, is creeping up over those last quarters, but you're still getting, a mixed pie. So in terms of having a diversified sales strategy from a publisher point of view is incredibly important, as well as agencies knowing what levers to pull for different types of activity and different objectives. So quite a mixed model there. That direct piece is direct advertiser. So that will look quite different depending on the types of inventory. A little bit heavier in the sort of the native, the heavy integrated side of things than some of particularly the video market. Oh, and I have got the chart to prove this. I forgot I had this one in there. So you can see the different types of inventory types and how that's spread in terms of spend. I won't go into this in detail. I should have said up front that this report, this deck will not be shared with everyone on the webinar, but anyone who is an IAB member, and most of you are, and if you're not, you should be, this is all in the report that was released in a couple of weeks. So we're sharing this a little bit more broadly than we would normally, but we won't be sort of giving the whole deck away. Video is a really interesting one in this chart in terms of particularly that PG spend being higher there. So both, I guess, both types of programmatic coming through there, but PG particularly having a bigger share than it does for other inventory. I couldn't resist putting this slide in. It just is the stark difference of how video has sort of jumped back. We've seen particularly in Q4 investment in long form video, so BVOD, also YouTube, but other areas coming through. But I'd say they're the two biggest drivers in the video market, but just a stark sort of growth in that last quarter. We're also breaking down video expenditure in terms of what device is being accessed from a revenue point of view, what's being monetized. Again, probably no surprises, but possibly the size is a surprise, is that connected TV has come through so strongly. So in that last quarter, 50% of revenue, not necessarily volume, but revenue is coming through connected TV. So a bit of a weird year for devices. We did see mobile slow down a little bit in terms of traffic with everyone at home, people on desktops a lot more, and well documented sort of people watching more streaming services of all varieties. So that sort of mix is a little bit different than it has been in previous years. Again, on the advertiser category, similar sort of trends. Retail up for that last quarter, the nice December seasonal uplift there. Auto is still actually down further than it was for the whole year, so sort of that 11% share of spend. Finance a bit steady, and then FMCG and telco technology still lifted there. We did see over the year some sort of peaks in government spending, particularly on health messaging, but overall these were sort of the biggest movers in the top end of town. Video revenue, I won't go through this in detail, but I just wanted to point out that it's looking a little bit closer. This is the subsection of display of the whole video, of the whole display sector that's for video. Retail is number 1, FMCG number 2. That isn't unusual for the video inventory, but it is unusual for the overall sector. So 2 things at play there. Video is making a bigger chunk of that overall sector, so it's influencing that top line a lot more, and also it's just coincided with those categories, particularly embracing digital advertising for that last quarter. So that information is there for you to review. Travel, as we can see right down the bottom, so hopefully we'll see. So we saw some brand dollars come through in travel at the end of the year, but it'll be interesting to see that March quarter as people start not only doing domestic travel, but some, well, at least interstate travel picking up there. A little bit of a sneaky look at January data, which we don't share a lot. So we do collect some data for some of our nearest and dearest on some of our members. So this is looking at the trend for those content publishers over time. Again, you can see that trend line for video going up, classified sort of heading down, and an overall display sort of coming up, but being driven a lot by the video side of things. So the pleasing thing, I guess, is the spend that we saw slushing around in November and December was still pretty healthy in January. We have seen some SMI numbers come out over the last few days that the overall ad market's probably not as sunny as this, but we have seen some pretty good investment in the digital area for January, and classifieds even sort of starting to creep back to where they were. So that's the headlines. I'm now going to bring in our agency friends to chat about this, if it matches what they're seeing, what they're thinking about for the year, what they're excited about, and more. And please shoot through your questions if you have any questions for the crew. So results are pretty amazing for digital. I sort of reluctant to say that, it sounds like we're bragging, but it has been a particularly good year, I guess, from a consumption point of view and a digital advertising point of view. I guess I'll jump into that last quarter, which was a flurry of activity, and I don't think I've seen more exhausted agency and publisher people for quite a while, but they couldn't complain. That different mix of inventory, trying different things, that overflow of dollars. I guess your opinion in terms of, will those sort of strategies stay? What have you tried that's worked? Do we go back to playing it safe? Liesa, do you want to jump off that one?
Yeah, sure. So I think, as the year evolved, we saw e-com come in, and then a lot of our clients were really even dialing up the digital component and their mix even more. So I guess we weren't really that surprised by the demand that came through in Q4, and a lot of our clients, laid down with lead times. But we did see pressure in that BVOD market, and we expect that to stay really that trajectory. So we did deliver because that was based on broader partnerships. But, as you said, it was 50% share of video inventory compared to, say, 38, 39 last year, which is incredible. So I think it actually opens up opportunities for BVOD to run more premium programming across these months, given that e-commerce fundamentally changed our landscape, and Black Fridays and Cyber Mondays and all the other dates are becoming so important. There's a real opportunity to take advantage of that. So if you look at that last quarter, it was kind of this perfect storm. Victoria came out of lockdown. You had the e-commerce Black Friday sales happening. You had tentpole programming coming off linear, and there was only a couple left on BVOD. So I think there's a real opportunity to expand that programming, and broadcasters are leaning into that and taking their catalogue straight to BVOD and then promoting it, which is good. Because I think once those, the demand curve and the supply curve meet, it's not just broadcasters that win, it's all of us. And the other thing we saw, as you mentioned, is that PG area where, 15% share versus 11% last year. And it felt like clients were using data to connect specific messages authentically and really seeking control and addressability and accountability, and given the uncertainty they've been through in the year. So whether that will probably continue for a little while, but whether it fades away throughout the year, it'll be interesting to see.
Okay. Nick, did you see the same sort of pattern happening?
We didn't necessarily see spread into different areas from our clients. I mean, we've had a fairly consistent strategy for sort of the last 18 months or so around focusing on building brands and using a lot of BVOD in doing that. And that's what we were doing going forward. There's probably an acceleration into the space driven by the audience movements we were seeing and various other factors which made other media less palatable within the planning process. Thinking particularly at, if you look at what's happened with the outdoor industry, a couple of factors at play there around planning it and lockdowns, and then clients being a little bit nervous about planning long term into Q4 into out of home for fear of losing campaigns. So looking to focus more where they knew their audiences were going to be, and digital and TV were certainly the key beneficiaries of that. But no, we didn't necessarily see a broader mix, people rushing to try new things because they couldn't get activity away necessarily. I'm never sure that that's the best thing to do anyway. What we were talking to about our clients that are very good at is, look, we saw Q4 coming, to be honest. We've been predicting it for a while. We saw a snap back, and that was the experience sort of globally. All the economic indicators were indicating there'd be a snap back into Q4. So we were talking quite early to clients about getting ahead of the game a little bit, and a lot of our clients did that. So we didn't see the same impacts as some in the market did.
That's good, and obviously your clients had the confidence in that to invest and put their money in.
Indeed.
Nice. Sarah, so you've gone from, I guess, bigger holding group to very big independent agency, trying lots of new things. What did you see in that last quarter?
It was very different for us because we have largely local clients, small to medium-sized businesses, property, entertainment, travel, a lot of small local businesses that did it really, really tough last year. So Q4 felt like a bit of a scramble, to be honest, and we saw it coming too, but it was more because of traditional media being oversold, right? There was going from a large holding company at the beginning of COVID into independent, you could see what was happening in terms of the deals that were being struck at the price point. So no matter what had happened for Q4, there was going to be an oversold situation. And I think video was really the beneficiary of that. So where we had people trying to get back onto television, whether they were tentpoles or not, there was still audience there, but there was, we discovered that there was often an oversell situation. So I think it was great for a lot of, well, not a lot, but a few clients who, really still very sus about BVOD numbers, not so sure about, whatever we're concocting in terms of incremental reach, prepared to give it a try. And so I genuinely believe that video was the beneficiary of that. So there's overflow dollars from poor yield management from the TV networks, in H2 basically.
And I guess one thing we saw for all the digital channels of traditional media over last year was that sort of programmatic coming into its own in terms of which, I like this and I don't like this. It's, I can turn it on, I can turn it off.
Yeah.
It'd be interesting to know, I guess, the, plans for this year, how reactionary you're feeling that clients are now that they've had the chance to do that, or are we keep talking about longer term planning, getting away from short cycles. Do you think we are, Liesa? Do you think we're?
Yeah.
Yeah.
I actually think it's mixed depending on the vertical, to be honest. So definitely the long-term outlook is strong and definitely confidence is returning. But I feel like there's this two-speed marketplace and e-com has changed clients' behaviours. So yeah, there is that short-termism, but it's in response to sales and they're changing their activity to drive those sales and performance. But then across this, you've also got this re-engagement back with brand because you don't have e-com without the strength of brand. So in that sense, it's quite long-term, which is great. Those two things working together are really great. It's not a reaction to the market, although certainly there are clients that are like that. It feels like, retail has had that peak in Q4. It's still got strong growth in Q1. Financial services, you might not be seeing it in January, but they're staying consistent and definitely ramping up for Q1. You know, tourism's challenged, but there are little pockets. Auto obviously being such a big category, it was more about product supply, but you know, we see that they will come back towards that traditional end of financial year period. QSR was incredible, just absolutely boomed, completely transformed their business models through delivery apps, that'll stay. Entertainment was all about streaming, you know, there's a little bit of movie activity, really innovative things happening by KO. But the other big one was really FMCG. So you may not have seen it in advertising, but you certainly saw it in sales. And the reason we didn't see it in advertising is because they were so buoyant. But the issue there is we're now climbing over such big targets. We're now cycling over such big targets. So it'll be really interesting to see how they react to that. And I think that momentum though on VVOD is actually carrying through. So people are starting to buy out a bit longer on there, having had the experience, a positive experience, leaning into the addressability and going, okay, that's a finite inventory, I need to lay that down. So a little bit of a mixed bag really, but overall absolute confidence for sure.
That's good.
Yeah.
And Nick, you've got Bunnings in the mix, who have been a bit of a superstar the last year. They're continuing to invest and lean in and invest in all the channels.
Yeah, I mean, not just Bunnings. We've a number of clients that are sort of lent in across the course of the year from an FMCG perspective, say Nestle, for instance. So we've had a number of clients that have sort of lent in, looked at what's happening within the Australian market and made plans accordingly. I think going back to your point though around programmatic, and is it just, you know, money dialing in for quick short-term game? It's not really the conversations that we're having with our clients around it. We see significant advantage trading programmatically from a brand building perspective as much as from driving that short-term sales perspective, and they're the conversations we're having with our clients. Obviously clients have sales targets and sales needs that they need to hit, and that's entirely right and proper for a business listed on the stock market. So you know, and we need to help them generate those sales, but equally those clients aren't blind to the need to build their brand and the impact that building that brand has on future sales potential. And we try and talk to our clients, and our clients are receptive to messages around how we do both of those things. And I don't think any particular media really just sits in one bucket or t'other. And a lot of the success that we've had in talking to our clients around programmatic and addressable media is around building brand rather than just, but rather than driving sales.
Sarah, does the brand argument work with your smaller clients?
Yes and no. I think actually the way we've been looking at it, or the way that we've been experiencing this sort of long-term versus short-term, are clients who are calendar year or financial year. So remember, clients who are running financial year from July last year, they're still, you know, they're still reeling. And I think that what we're noticing, and they're in two buckets, right? Financial year clients, they're still looking to see, you know, from January to June this year, whether or not they can get their P&L in order. And whereas our clients who are calendar year feel a lot freer to make those bigger spends, commit for longer, look at bigger projects.
Okay, we're going to do a quick fire round. I'm going to name some, I guess, upcoming, you can debate that, different formats in digital. And I want one word to one sentence response from each of you on your gut feel, or however you want to position it. I'll leave that to you without, you know, losing too many friends. Streaming audio, let's start with Sarah.
Well-developed strategies for client utilization leading to easier opt-in.
Someone's done their homework.
That's about 3 sentences.
Nick.
Untapped potential.
Liesa?
Yeah, just love so much rich stories, targeting, love it. Just need to get our measurement across the audio space, but yeah, great opportunities, market, love it. Yeah.
Let's start with you, Liesa. We'll go backwards. Podcasting.
Also love. I think marketers are really engaged. It grew so much over COVID. It's not a niche space anymore. It's absolutely a place you can engage, brand and recall. Yeah, great opportunities.
Nick?
Context.
Nice.
So do you want me to expand on that? I'm trying to do one word. Everyone else is doing big sentences.
You're playing by the rules. It's good.
I'm sticking by the rules. Context. No, I think context is so important when advertising within podcasts. It's a deeply personal space, and advertising, I think, can play a significant role, but context is critical within that. So understanding the context you're advertising in, ergo delivering signals about the context you're putting ads in, is the critical element in that.
And can you afford to do that? Have you got the time and the energy to do that?
To what, me as a media trader, or me as
Yeah, I guess as clients,
or
like
me as a listener to podcasts?
I guess it's just it's a sort of, you know, it's a more to understand the context of all those different podcasts, and I think it's an amazing opportunity.
I mean, the answer is no. A media trader can't ferret through literally billions of podcasts to understand the context. However, if we can pass back signals and trade it programmatically, that's obviously how we look to do it.
Perfect answer. SK.
Too much fragmentation needs consolidation.
In buying methods?
Buying.
Okay.
Basically, you know, the only solve for what Nick's talking about is there needs, I mean, signals or whatever, but it's just, there's not a quick, efficient way to make this scalable for clients in a meaningful way.
Programmatic digital out of home. Sarah, we'll stay with you.
It's standard now, isn't it?
Is it?
Well, they do make it very easy, whether it's programmatic or not. They do make it easy.
Yeah, digital out of home. Yeah, Nick.
Super untapped potential.
Perfect, Liesa.
I think clients love the reactive nature of this one. And even through last year when we lost footfall, you know, we still had petrol pumps and people finding petrol pumps programmatically, and that start, stop, pause was fantastic because it gave clients confidence, you know, and then you tie that up. I guess it's, you know, as we get more footfall, we'll have more inventory, we'll expand accountability and addressability and the data assets. You tie that up with pathology and flybys and mobile. Yeah, it's really, it had a bit of a hit last year, but it'll come back this year if that, you know, if we can keep that confidence there, and then it will return to growth next year for sure. Yeah.
Right, well, we might mix the last two up because you've touched on it. Retail media. Liesa.
For me, I can't do this in one word. Yeah, I think e-com just, you know, there's 67% growth from April, and in August there was about 80% growth. So I sort of look at this in three ways. So D2C, clients are getting their commerce platform sorted. We've got great partnerships happening in the data collaboration space. And then Amazon's diversification, not just unboxed and formats, but, you know, behavioural and endemic and non-endemic, but also clients are looking beyond their own e-store into marketplaces, a la Bunnings. And, you know, even fulfillment changed all of that, you know, Australia Post's reaction with Fulfillium. So I think some clients have got all of that wrapped up, some have got none. And so just one other point is that you've got, it kind of feels a bit like the MarTech land where we've got our marketers, our e-com and our supply team over here. Then we've got agencies, and you can't forget the retailer either, you know, the retail publisher either. So bringing all those together is kind of the opportunity, I guess.
Nick.
Essential. I think, you know, everyone learned last year if you didn't have an e-com strategy, you really needed one, and that's not changed.
So I guess just drilling into that, so retail media rather than e-commerce, I guess it's part of it, but you see it as one of the same or a
look?
I
mean, it depends how you. I mean, it depends how you pull it apart. And I think there's yeah, no, good challenge. Yeah, look, if you take purely and holistically retail media as you would define by retail media, so let's go with something like out-of-home sites in shopping centres. Cartology, thank you. One of the things that we have, one of the things that I think really you noticed in the recovery from the GFC was clients' desire to really focus in on driving those sales, and that became the key element for them, and retail media really benefited from that for quite a period of time. Actually, I don't think this is the same as the GFC, just to be really clear. I think the way the economy is working, consumer sentiment, all those things are actually quite dramatic, really quite different. But I think that underlying need or the underlying importance will be there. Clients will need to be driving sales. There's some weak numbers obviously being lapped, and then there's some strong numbers that they'll need to lap. So there'll be an overlying need for it. There we go.
Thank you.
More effective answer for you.
Sarah.
This one to me is exactly the same as streaming audio. That really, I think the sales guys are doing an amazing job. So well-developed strategies for client utilization, which leads to easier opt-in. I can't tell you, you know, if I look at all channels in the last 6 months, I think retail media teams have done an outstanding job.
Awesome. Looking forward to that next Media Eye study then. Last one, and this is one that, you know, I think every 3 years I've sort of had this on my list as the big one for the year, but it feels like it might be closer now. Gaming. Sarah, let's come to you.
They just need to do so much more work in terms of surfacing their audience. I think their audience is way too pigeonholed, too easy to say, oh, it's this, not that. You need to do a huge amount more work on who that audience is.
Nick?
Look, I think there's an interesting question here around value exchange versus value extraction. And what I mean from a consumer perspective, not from a media perspective. Consumers accept a value exchange, i.e. you get this because advertising exists, or this is better because advertising exists. And I think in the gaming environment, that's a much more difficult concept for consumers to have and to grasp into, and therefore it makes it much trickier from a more general advertising perspective. There's obviously some specific, not specific, but there are sort of some key threads and themes that you can play to quite well, and advertisers in relevant categories can play to quite well, that can work, that can be accepted, that are seen as a value exchange, but it is a trickier proposition.
Okay, Liesa.
Yeah, I think as a group, we actually just partnered and did deal with ANSU. So we definitely believe in the space, and that was to run kind of native gaming inventory in the right environment, and come up with an awesome solution. And there's definitely really beautiful work and a lot of excitement probably over the last 18 months. But I think, and for some clients, it makes complete sense. And for others, it's sitting in that innovation bucket. So a Twitch pre-roll might be great for a certain audience, but when it comes to, you know, creative content pieces, brands actually want to ensure they have the right to play. And so I think our clients get the gaming world. We're one of the biggest spenders in gaming around the world, and we're top 10 or 11. So I think it just comes down to education, inspiring case studies, and, you know, with more programmatic flexibility, I think that will come.
Awesome, which is probably a good point to say. We're kicking off our gaming working group, I think, next week. So we'll take all that into account and I guess get that excitement as well as some of those, you know, what people might consider boring IAB standards underneath to make it all easier and safer for you guys as well. 2 more things I'm going to do. We're going to talk about loss of signals and I guess linking that to context. So both looking at how you guys will value inventory with changes in signals, and sort of on top of that, there's a lot of talk about the role of context. How we, I guess, marry those two to ensure as a market that we're valuing inventory in the right way. Who wants to take this one first? It's a hairy one.
I mean, I'll start with a pretty broad statement and then the guys can jump in, but I think that publishers are, but we need to be mindful of the fact they're doing a lot of work already, testing, collecting, sharing those signals to try and, you know, with their contextual data to try and create proxies for audience targeting. And I think that we, particularly with the news from this morning, we have to be super supportive of that on behalf of our clients. I think this is a time to really lean in and understand what publishers are doing on that front and understand it more and support them on that, because, you know, otherwise it serves nobody to start getting aggressive about this, because no one's got any choice about it, right?
Who wants to? Nick?
I'd agree with Sarah there. I mean, we've been putting a lot of work in about working with publishers around passing back contextual data. We do a lot of work, obviously, within the first-party data environment, and that's really, really important to us. But I think more broadly, you know, we need to partner together to understand and work to make that future environment work for us in the most efficient and effective way possible. And a lot of that is around really putting some effort into understanding the outcomes our advertising is generating past the media metric, if you will. Because the more we can understand that, the more we can understand the levers that we're pulling, the more we can understand the impact that more generalized, anonymized audiences are having. But yeah, I mean, it's you know, it's what the future is going to be. We need to accept and embrace that and move forward together as partners.
Liesa.
Yeah, I think, like, well, firstly, I'm truly excited by the identity space and, you know, where we're going as an industry, be it clean rooms or privacy sandboxes or universal IDs, cohort approaches, and the REARC project. But I think for those clients where, for those publishers where they're more focused on performance media, you know, I guess it's fair to say that many have moved away from demo and age already, and they've got opportunities in place. So I guess the question's around how can we help? And I think if you take a step back, you know, we still have an audience. It's just the targeting and retargeting part that's going to disappear for those publishers. And you know, that logic still exists that we can use on every other medium. That's still there. And the opportunity is to step out of our tech bubble and really create positive partnerships and talk context and the forces to that, you know, consider audience and time and place and creative and partnerships. That's actually quite liberating. You know, those contextual signals from content consumption data, it's still there and it's still a signal to receptivity, and it'll be continue to important. So there's all sorts of panel data fusion, media mix modeling, partnering with second and third party that they can do, and also build their own identity solution. So that's a value exchange, you know, and that can be done in relationship with advertisers, can help with that. So unlocking different features and saved info and offers. And likewise, so I guess sellers can consider that value exchange and buyers can support it by being really open to content and context. So, you know, cookies are always a proxy for mindset and intention. And we still know the person who went on the car site, they still want to look for a car. So I don't think, you know, don't get the reason where this has all come up. And it's about consumer and privacy and choice and create a better industry. So I think, you know, that's giving control back to our consumers, and we just need to think a little bit differently about it. You know, it's going to be challenging to compare campaigns, but what you can do is put tests and benchmarks in place now, which, you know, most people are moving well towards. So
absolutely, if people aren't doing experiments now, it's getting a bit late. But I'm you know, I'm an old school media researcher, right? I'm quite excited by sort of having that top down sort of approach at looking at what's happening, market mix modeling. I guess there's just different capability we'll have to build into. We've lost a lot of that capability out of the industry. So I guess making sure that that's there, and all our wonderful data scientists who are used to having sort of a signal for everything, learning how to model in different smart ways. So I think we'll all have to do a bit of retraining in that area. Okay, last thing from each of you. You can give me one or two, depending how long you want to talk, on the thing that you're most excited about for the rest of this year. Liesa, you look excited already.
Yes, I am excited. I love change because it brings innovation. So it gives us an opportunity to just lean back and think how we want to rebuild the industry, you know, taking the base, but reinventing where necessary. So I'm really excited about the identity strategy options, and testing and change management is already well underway for that proposition. So this morning wasn't news. It was, you know, it was probably a little bit early, but it wasn't news. You know, we knew we were going there. So, you know, we're reconnecting that world for intelligence. And I guess second is when you're a marketer, your whole world is about the consumer. But for the advertising industry, we haven't really, you know, we're now putting the audience back into control. And I hope we stay like that. You know, if we're smart, we'll be respectful, we'll rebuild, we'll put creativity and quality back at the heart of what we do. And so we have an opportunity to impact, you know, balancing privacy back with precision and partnership and collaboration. We're going to have to do that to make it work. So, you know, industry is so dynamic. You think of what we've talked about, e-com, creative optimization, audio, programmatic outdoor, addressability, content, like it's crazy what we're going through, but really, really amazing and really, really exciting to really get back much closer with business objectives and clients, I think.
Cool. Nick, what are you excited about?
Just the opportunities that the year holds forward. I mean, everyone's put a lot of thinking into, you know, last year put a lot of thinking into how their business grows and evolves moving ahead, and probably didn't have the opportunity to implement a lot of that given the nature of the year, and now is sort of really where that rubber hits the road. I think one of the things that really I'm excited about, and it sounds similar to Liesa, is that renewed focus on all consumer and impact on consumer, and moving past an understanding of what media metrics you drove to understanding the fundamental business impact that you drove. I think we've got, as an industry, a little bit obsessed with driving media metrics, and we just use them as a proxy for the impact that they've had on the consumer, whether that impact is true or not. And I think the changes that, you know, have just been reaffirmed. I mean, there's nothing new. They're doing what they said they were going to do. I think what that does is it puts renewed focus back to understanding what is the actual consumer impact, and if we get better at doing that as media people, if we get much better at planning around that consumer impact, I think we come out with a much stronger industry.
Sarah, what are you most excited about?
Well, to quote someone way smarter than me, I think, you know, that last year showed us that we're really in a time of digital Darwinism. You know, we're in an era where technology and society are actually evolving faster than the businesses can naturally adapt. And I think this has really set the stage for 2021. You know, I think there's going to be, we're already seeing it, you know, with obviously Google's announcement this morning confirming what we knew, but it means that people have really got to change again. You know, Nick touched on it just there, new generation of business models. And, you know, there really is some serious meaning behind that kind of adapt or die in terms of the way that we operate. And I think, you know, that's sort of like my big statement, and I can really already see it. I think people have accelerated. A lot of businesses, certainly data visualization, data collection, a lot of that has really accelerated, you know, into 2021. And I think from, you know, my personal point of view, the thing I'm most excited about is measurement coming to the fore in 2021. I think we'll stop talking about VOS. We're going to really, you know, ACR's really already sort of come to the fore, and you know, you can see it already in terms of clients and what their expectations are around, for example, data and data visualization. And I think that, you know, there's so many tools in the market that you needed a data scientist to use, you know, 18 months ago now are so much more available and ready, you know, and anybody can use. So that's what I'm really looking forward to, is sort of demystifying a lot of this stuff this year, because last year because of the situation we're in, people really did have to accelerate.
We had a quick question for Nick, keeping you honest. You don't have to go into too much detail.
Just responding to that one,
I think
actually.
it's fair enough for the audience to. So Megan Brownlow sort of questioned Nick in terms of why gamers are less sort of open.
Why that value exchange?
Yeah.
I literally was just responding to her saying I probably need more than 2 minutes to talk about that. Okay, let me try and think of a potted, and this is probably going to sound a little bit too simplistic, so because I'm trying to do it in 2 minutes. So please bear with me, and if it sounds simple, really my brain thinks of this in a slightly more complicated way. The reason is, if you look at gaming, there is a huge swathe of gamers, from the console players to the iPad, $15 to play Settlers 5, to the you know, Candy Crush or whatever your favorite mobile game of choice is within that mobile gaming environment. And a lot of gamers stick in one area, and a lot of gamers play across multiple different areas. The problem is that that upper end of the area where you're forking out, you know, $100 to go for a Call of Duty or whatever it is, and you're going to go and play that. That is your value exchange, right? Here is my $100. Thank you very much for my game. As a brand, what are you adding to that experience? That's the key, and that's what I mean by this value exchange. So as a brand, you need to add a lot to that experience for me, for it to be a value exchange. Whereas if I'm watching television, for instance, or indeed in a BVOD environment, I'm getting a great or something I value because I'm watching it, I'm getting that thing for free. I'm probably more open. I'm going to complain about it because I like complaining about everything, but I'm going to be a lot more open to that as a value exchange. I kind of get it. All right, I'm going to sit through a minute and a half, 2 minutes of ads because I'm getting this program and I like watching it. I've just forked out $100 for Call of Duty, and you're going to stick and or try and work an ad into there unless you're really contextually relevant and really playing to what's important to me. And remember, what's important to me is going to be different for lots of people. I think it gets more difficult to create that value exchange. And then as you move down the tree, obviously, it gets easier and easier and easier. But what that means, it's a very difficult category to holistically manage. And you've got to put a lot of effort into getting that value exchange right.
Sounds like Nick's putting his hand up for the working group. All right, thank you very much. If anyone wants to look at the revenue reports, and we've got the complete data set, and remember, Tiff will put a link up there. All the historic reports are up on the website. Our next event is most excitingly a live event, which is our first time back with the community. So our audio summit will be held on the 16th of March at the Australian Institute of Music. So a lovely venue with lovely sound for our audio people. So please book your tickets now. There will be a live stream as well, but would love to see as many of you there as possible to get excited about streaming audio and podcasting. We've heard what these guys think about it. It sounds like there's a lot of potential. We've got our annual State of the Nation research where we have talked to 200 plus agency people around their plans and their thoughts and their barriers and opportunities for that market. So we'll be going through that, as well as analytic partners will be joining us to look at audio in the media mix and how sort of clients and advertisers can really make the most of that singing across their channel planning, as well as a whole lot of really lovely local case studies that should get people excited. So please book into that. Thank you, Sarah. Thank you, Nick. Thank you, Liesa. You've left me very excited about where we're going, what we're doing. So thank you for joining us today, and thanks for everyone in the audience.
Thanks a lot.
Thanks, Gai.